Did you know you could be eligible to save thousands of dollars a year on your property taxes in Washington? Stay tuned to learn how you can qualify for a financial break that could change your budget for the better. Okay, let's dive right into this incredible explainer on how you can drastically lower your property tax burden in Washington state. Look, the sheer amount of money you might literally be leaving on the table right now is staggering. We all know property values are just skyrocketing all over Washington state, right? From King County to Spokane, longtime homeowners are seeing tax bills that are getting incredibly hard to manage. But the state actually has a powerful, constitutionally protected relief program designed specifically to help with this. If you qualify, this program basically freezes your home's assessed value and exempts you from certain excess levies. It is literally designed to keep vulnerable homeowners on fixed incomes from being priced out of their own homes. So, here's our roadmap for today. We're going to quickly cover the basic eligibility requirements, walk through the step-by-step application process, look at exactly where and how to apply, share some absolutely essential insider tips, and then wrap things up with a few FAQs. All right, Part 1, Exemption, Basics, and Eligibility. Let's figure out exactly who gets to claim this potentially life-changing tax relief. So here's the kicker. You don't even have to be 65 to get this. I know a lot of people assume that, but it's just not true. You only need to be 61 or older by December 31st of the assessment year. But hey, even if you are younger than 61, you might still be fully eligible if you're retired due to a disability. And speaking of which, there's a massive update coming for our disabled veterans. Starting in 2027, the required service-connected disability rating is dropping from 80% all the way down to just 40%. Surviving spouses or domestic partners who are 57 or older can also qualify. And of course, you do actually have to own the home and live in it as your primary residence for more than 6 months out of the year. So no vacation homes allowed for this one. Now here is a trap that catches so many people off guard. Washington state calculates your income using what they call combined disposable income, or CDI. It is completely different from what the IRS considers your federal adjusted gross income. The county assessor is looking at all the money coming in. We're talking gross Social Security benefits, annuities, investment dividends, net rental income, basically the whole shebang for you, your spouse, and any co-tenants living in the home. Because of that CDI calculation, you've absolutely got to check your specific county's limits before you just assume you make too much money. These income limits are tied to your local county's median household income, so there is a huge variance. Look at this table. For the newly expanded 2027 limits, the cutoff in King County jumps all the way up to $101,000. But over in Grant County, it sits at $61,000. Your county will place you into one of 3 exemption tiers based on exactly where your income falls, and that dictates how much of your tax bill gets wiped out. Okay, let's move right along to Part 2, the step-by-step application. We're going to break this down so it's a super easy, actionable process. Applying really doesn't have to be some overwhelming chore. It boils down to these 4 straightforward steps. Step 1, identify your qualifying tax year, keeping in mind that eligibility is based on your income from the prior assessment year. Step 2 is compiling your documents, which we'll look at in just a second. Step 3, you submit everything directly to your local county assessor, not the state. And Step 4, just keep paying your scheduled property taxes. The assessors are pretty slammed right now, so the review period can take about 3 to 6 months. If you end up overpaying while waiting for approval, no worries. The county treasurer will simply issue you a refund check. Right, so about those documents, you need to gather every single one of these before you start, because missing paperwork is hands down the most common reason applications get delayed. Grab your valid Washington State ID to prove age and residency. If you're applying under a disability, you'll need an award letter or a medical affidavit. Make sure you have a copy of your property deed to prove ownership. And critically, you need that financial paper trail. Your full 1040 federal tax return, all your year-end income statements like 1099s and W-2s, and full bank statements covering at least 1 month of the year to verify your cash flow. All right, Part 3, where and how to apply. You've got your mountain of paperwork organized, so where exactly does it go? While you totally can do this by mail or in person, I highly recommend utilizing your county assessor's secure online portal if they have one. Major counties like King, Pierce, and Snohomish have dedicated portals where you can directly upload your PDFs, and it is the absolute best way to avoid backlogs and get processed faster. But if you do prefer the analog route, you can always drop off physical forms in person, like at the Robert J. Druhl Building in Everett or the Assessor Treasurer's office down in Tacoma. Now, check this out because this is a massive opportunity. Did you miss out in the past? If you met the criteria in previous years but just didn't know about the program, you can actually file for retroactive refunds for up to 3 prior years. Seriously, up to 3 years. You just need to submit a distinct, complete application packet for each of those historical years using the income thresholds and financial records that applied back then. Moving on to Part 4, Essential Tips and Resources. Let's look at a few insider strategies that are going to make getting approved significantly easier. This one is a real game changer. The 2027 law changes from Senate Bill 6162 are bringing some major simplifications. The absolute best part is a brand new standard deduction. This completely eliminates the administrative nightmare of hunting down receipts for every single out-of-pocket medical expense or Medicare premium just to lower your income. Starting in 2027, you can just take a flat standard deduction of $7,500 per person. That's up to $15,000 for a couple. It also officially drops that veteran disability requirement to 40% and fully exempts qualifying homeowners from Part 1 of the state school levy. If you're feeling overwhelmed at all, please do not hesitate to call these community resources. The staff at the assessor's offices genuinely want to help you stay in your home. Give them a call. Also, keep an eye out at your local senior centers, public libraries, and groups like the United Way. They frequently host free, in-person application workshops where volunteers will literally sit down next to you and help assemble your entire packet. And finally, Part 5, FAQs and Final Steps. Let's clear up a couple of common lingering questions you might have. First up, a very common question. What happens if your income suddenly changes? Or you decide to move out of your primary residence? Life happens. Maybe a new pension kicks in, or you just need to downsize. Well, it's totally normal for circumstances to shift, but you do have specific legal obligations when they do. If your income pushes you above the limit or you sell the house, you absolutely must file a status change notice within 30 days. If you fail to report it, you could be hit with back taxes for up to 5 years plus a 100% penalty. Yikes. But on the positive side, if your income spikes for a year and then drops again later, you can just reapply and get your benefits right back. And remember, even if nothing changes, you'll still need to do a quick renewal every 4 to 6 years when your county sends you a notice. Knowing all this, who in your community might be leaving thousands of dollars on the table simply because they haven't applied? Way too many people assume they make too much money or they just get intimidated by the paperwork. Please share this explainer with your neighbors, friends, and family members to make sure they're getting the relief they deserve. And make sure to subscribe so you never miss out on valuable insights like this. While we strive to provide accurate and up-to-date information, this explainer is for informational purposes only and does not constitute legal or financial advice. Please consult with a legal expert or financial advisor for advice specific to your situation. Thank you so much for joining me today. But before you go, I want you to ask yourself, who in your life is needlessly struggling with property taxes right now? Send them this information, and let's keep our neighbors in their homes. See you next time.